Hello everyone, this is B.S. Surenwar, Assistant Professor of Commerce, Government First Grade College, Pashapur. Dear students, today I am going to present a topic on explanation of relevant provisions of Companies Act and notes to preparation of final accounts of company under first unit Company Final Accounts. For the preparation of a company's financial statements, first of all, we might have to know the special provisions of Companies Act 2013 relating to preparation of a statement of profit and loss account as well as for preparation of a statement of assets and liabilities. So, let me first of all give a brief idea about such provisions relating to preparation of a financial statement. First of all, Schedule 3 of Companies Act 2013 made it mandatory to follow the vertical format for preparation of final accounts of company. Before 2013, we are practicing horizontal form of preparation of final accounts of company. Now it has been replaced by vertical format. Under Section 129 of the Companies Act 2013, at the annual general meeting of a company, the board of directors of the company shall lay financial statements before the company. As per Section 2, subsection 40 of Companies Act, the following are the financial statements prescribed. One is statement of assets and liabilities. Secondly, statement of profit and loss. Third one is cash flow statement. Fourth one is statement of changes in equity. And one more is any explanatory notes annexed to or forming part of final accounts. Dear students, of these 5 statements, during this chapter, we have to discuss or we have to get the knowledge about first 2, that is statement of assets and liabilities and statement of profit and loss. And regarding these 2 statements, I have explained the format of these 2 statements during my previous class. All the other companies, except in case of companies for which specific act is applicable, for example banking companies, electricity companies, like that, shall prepare and present balance sheet as per part 1 and statement of profit and loss as per part 2 of Schedule 3 of Companies Act 2013. And one more important provision here is accounting standards issued by ICAI should be followed while preparing company final accounts. The next provision is statement and guidance notes issued by ICAI should be followed. The additional disclosures specified in the accounting standards shall be made in the notes to accounts or by way of additional statement unless required to be disclosed on the face of the financial statements. And notes to accounts shall contain information in addition to that present in the financial statements. And for the preparation of financial statements, the Companies Act 2013 made it very clear about the financial year. The financial year means April 1st to March 31st. And there is a provision of 2 years transition period for the existing companies to follow the new financial year. Books of accounts may be kept in electronic form also. In addition to physical form, we can also keep it in electronic form also. The books of accounts to be kept at its registered office. Dear students, earlier we are going to prepare the separate appropriation account, that's profit and loss appropriation account. But the provision of New Companies Act 2013 made it very clear that the appropriation of a profit is to be presented under reserve and surplus only. Then all assets are classified into 2 groups. One is non-current assets and another is current assets. Then all liabilities are classified in 2 groups like non-current liabilities and current liabilities. The sundry debtors and sundry creditors are called as accounts receivables and accounts payables respectively. Now, As we discussed in my earlier session about the formats of company final accounts, based on that format, now let me discuss in detail about how we have to prepare the notes to statement of assets and liabilities and statement of profit and loss account. First of all, I would like to explain about the statement of assets and liabilities. In a statement of assets and liabilities, we have a first item in the balance sheet, that is in the equity and liability side, that is share capital. Share capital comprises of the items like this. One is authorized capital, then issued capital, then we have to take subscribed capital, called up capital. Then from that called up capital, we have to subtract the calls in arrears if any, and if there is any forfeiture of shares, that is to be added back, and then we will get the paid up capital, and we have to adjust the calls in advance if any. Then we have to make the total of all these, and this amount is to be recorded in the balance sheet at first under equity and liabilities, that too under shareholders funds head. The second note is very important of all the notes, that is reserves and surplus. We can say that this is the crux of the statement of assets and liabilities. In this, we have to record all the reserves and surpluses. The reserves like capital reserve, capital redemption reserve, debenture redemption reserve, security premium, revaluation reserve, general reserve if any, other reserves if any, like tax reserve, amalgamation reserve. So such all the reserves are to be recorded in this place. And then we have to record the surplus. And a surplus, first of all, we have to take the opening balance of surplus if any. Then we have to add the profit of the last year. Then by making the total of these two, now we have to go for appropriations. In appropriations, we have to record the transfer to general reserve, debenture redemption reserve, bonus shares issued if any, interim and proposed dividend distribution tax, like this. So all these are to be subtracted from the total profit, and the balance of surplus is taken to the outer column, and this is to be added with the reserves, and whatever the total arises, that total is recorded under the head reserve and surplus in shareholders funds. If there is any information about money received against share warrants, that is to be recorded through a separate note. And likewise, we have to also prepare a note for share application money pending allotment. The item long-term borrowings covers the items like bonds and debentures, term loans that may be from banks or from others, deferred payment liabilities if any, deposits, loans and advances from related parties, long-term maturities of finance lease obligations, other loans and advances. We have to specify the nature if given about these things. Then the total of all these are called long-term borrowings. The long-term borrowings can also be classified in the note like this as secured borrowings and unsecured borrowings, and the total of all these are taken to the balance sheet. Then about deferred tax liabilities, net amount is to be taken. How that net is to be taken is to be recorded here as the deferred tax liabilities, and from that we have to subtract deferred tax assets. Then whatever the balance arises, that is taken to the balance sheet. Then other long-term liabilities like trade payables, other payables are to be taken here. Then other long-term provisions, through a separate note we have to record as about these. We have particularly the information will be provided in the problem as a provision for employees benefit or some other reserve like that. That is to be taken under this head. And then in current liabilities, we have a first item as a short-term borrowings. Regarding short-term borrowings, the information will be provided like loans payable on demand from banks or from others, and if there is any short-term deposits, that is to be taken, loans and advances from related parties, other loans and advances if any, those all things are to be taken under this note, and these things are to be divided through whether it is a secured or unsecured, and it's to be disclosed in the note, and the total is taken to the balance sheet under the head current liabilities. Then we have to take the item about the trade payables. Under trade payables, usually we have the items like sundry creditors or bills payable, short-term if any are to be taken, or if any other short-term trade payables, those things also to be taken here. Other current liabilities like current maturities of long-term debts, current maturities of lease obligations, interest accrued but not due on borrowings, interest accrued but due on borrowings, income received in advance, unpaid dividends is also called as unclaimed dividends, application money received for allotment of securities and due for refund and interest accrued thereon, unpaid matured deposits and interest accrued thereon, unpaid matured debentures and interest accrued thereon, and other payables are to be recorded under the head other current liabilities. And in the current liabilities, one more important item that is short-term provisions, and for this also we have to make a separate note, and it covers provision for employees benefits, that is for salaries, wages and bonus like that, and other provisions like provision for income tax and proposed dividend are to be recorded under this note, and the total is taken to the current liabilities. And in the second part of the statement of assets and liabilities, we have the assets. And under assets, we have the fixed assets, and under that fixed assets, we have four important items. Of that, one is tangible assets. The tangible assets like land and building, plant and equipments, furniture and fixtures, vehicles, office equipment, and other tangible fixed assets are to be recorded through a separate note. Likewise, intangible fixed assets like goodwill, brand and trademarks, computer software, masterheads and publishing titles, mining rights, copyrights, patents and other intellectual rights, services and operating rights, recipes, formula, models, designs and prototypes, licenses and franchises, other intangible fixed assets are to be taken under a separate note as intangible fixed assets, and the total is to be taken to the non-current assets head. And then under fixed assets, we have two more important items as capital work in progress and intangible fixed assets under development. These two important items are to be taken separately under separate notes. And the capital work in progress covers cost of self-constructed assets as well as intangible assets under development if any. And in intangible fixed asset under development, we cover the informations like research and development on self-developed assets and even development rights also. And then non-current investments covers investment property, investment in equity instruments, investment in preference shares, investment in government or trust securities, or in debentures or bonds, in mutual funds, partnership firms, and if there is any other current non-current investments are also to be specified with the nature. If there is no deferred tax liabilities net, then there will be deferred tax asset, and that is to be taken under this head. Then long-term loans and advances, it covers capital advances, security deposits, loans and advances to related parties, other loans and advances, and it is to be classified through the secured, unsecured, doubtful like this. We have to prepare a separate note for other non-current assets, and for current investments, we have the items like investment in equity instrument, preferences, government or trust securities, debenture bonds, mutual funds, partnership firms, and other current investments. And the total is to be taken to the current assets head. And under inventories, we have the items like raw materials, work in progress, finished goods, stock in trade, stores and spare parts, loose tools, others also. And in trade receivables, we have usually the items like bills receivable and the debtors. And with cash and cash equivalents, we have the items like a balance with banks, checks, draft on hands, cash in hand, and other if any is to be specified with the nature. If there is any shorter-term loans and advances are to be taken under the separate note and recorded under the head current assets of the balance sheet. And if there is any other current assets like unbilled revenue, operating lease, financial lease, hire charges receivables, claims receivables, insurance claims receivables like that, also to be taken under the separate note and recorded under the head current assets of the balance sheet. In this way, we have to prepare the notes to the statement of assets and liabilities, and the totals are to be taken under the balance sheet in respective heads. And dear students, during this session I have discussed about the special provisions and preparation of notes to balance sheet. During my next session I will discuss about the notes to preparation of profit and loss statement, and these are my references. Please go through these. Thank you.